Hey guys, Micah here with WaveTech FX. I want to just do this video on the WaveTech exhaustion indicator and a couple of trades that was called in our WaveTech weekly outlook group. And what this indicator does, it finds exhaustion in the market. This indicator is, it pulls data from 6 different time frames, and once all time frames are exhausted, there's only one way for the market to move, and that's in the opposite direction. So we actually launched this indicator on Monday. You can head on over to www.wavetechfx.com to pick up this indicator, and you will get a 10-day free trial. But let me show you how this works. So as you can see, we pinpointed exhaustion. So all time frames was exhausted. And let me go show you our group. So this is our WaveTech weekly outlook group, and we call trades in this group that are exhausted. And as you can see, there's about 9 pairs that were either on its way to exhaustion or exhaustion. So I'm gonna do this video on AUD JPY and CAD JPY. That's the 2 trades that I entered. So as you can see, this is my entry point, and let's go to my broker. I am 68 pips in profit on the AUD JPY, and at the top here, it is a real account. This is not a demo account. So I moved and I secured my stop profit in 50 pips. Let me go 50 pips. So I'm looking for this to go a little bit more ways down, and if it doesn't, it comes back and hit my stop loss. That's okay. I've already had 50 pips secured. And let's go see CAD JPY. CAD JPY, 45 pips secured. Total move right now, it's 59 pips, and you can see my profit is about 119 right now. So let's go get my entries, and let's show you the power of this indicator. So for the CAD JPY, the entry was at 83.337. Okay, as you can see, there was an exhaustion here, and here was my entry, 83.337. And for me, the WaveTech style of trading, we don't use more than a 10 pip stop loss, and I'll show you the significance in that as well. As you can see, from here to here, it's about 10 pip stop loss. As you can see, it didn't even wick back from my entry. So from here, it's all profits. The total move was 77. It's making a little retracement now. I am banking on it to go, move further down. But again, I've already secured 45 pips, and that's, if it hits my stop loss, great. I'm still in profit. Let me show you the significance of using a type stop loss. And the way you use a type stop loss is, again, finding that true exhaustion on that time frame. The average trader, or the old paradigm as we call it, uses between a 30 to 50 pip stop loss. And there's pros and cons in it. The pros is you give the market, some wiggle room. And, with this style of trading, using a 30 to 50 pip stop loss, you're basically trading in zones. You don't know the exact turn of the market. So that's why that, large stop loss. But again, it gives it a little wiggle room. And, that's basically, all it's good for, the wiggle room. But again, when you know the exact turn, for us, we use a 10 pip stop loss. And I'm going to pull up this calculator, and I'm going to show you the difference. So starting off with the $500 account, And let's go on the low side, 30 pips. And we call it stop profit. And wave tick style of trading, we never set a take profit. We always get stopped out in profit because we want to capture the whole move. We don't want to limit ourselves. If we get stopped out, we're always getting stopped out in profit. So let's calculate $500 account, risking 2%, stop profit at, let me put 30 pips. Projected take profit, 50 pips. Okay, your max lot size to trade, if you're following proper risk management, which a lot of traders don't, following proper risk management, with this account size, you'd be trading at a 0.03. Now, the 2% risk in that is $10. Your potential gain when it moves that 50 pips is $17. Now, let's show you the wave tick way. Risking the same 2%, same $500 account. Now you're calculating your stop loss in 10 pips. Now watch the difference. Now you're trading at 0.10. Your margin risk is $10. Same amount as the 30 pip stop loss. But the significant change is your potential gain. You're gaining 50 bucks. Now that's a significant difference. This is 3 to 4 times more than what you would make trading the old paradigm way. And not only that, let me ask you a question. Now, we all lose trades. If anyone tells you that they don't lose a trade, that's a lie. Everybody loses trades. You can't be 100%. But here's the question. Would you rather lose 30 pips or would you want to lose 10? Now, a person who loses 30 pips, in order for them to break even, they have to gain 30 pips. Now, with the wave tick style of trading, to break even, you only need 10 pip gain. So it's easier for me to gain 10 pips than gain 30. That's the big difference in this style of trading. So I hope this video was informative for you. Again, you can pick up your 10-day free trial at www.wavetechfx.com. The link will be in the description. Until the next video, aloha, stay blessed.